Hello. Here is a question that confuses every smart people here. Can an Indian citizen live abroad and pay zero tax in India? And another question could be, can a foreigner end up paying tax in India? The answer to both these questions is yes. And the answer depends on one thing, and that is your residential status. So, guys, welcome to episode number one. I am starting a new series covering the concepts of Income Tax Act 2025. So, guys, here we are going through the Income Tax Act one topic at a time, and this is the best time to start because residential status comes first. Before you can talk about income, deductions, or tax slabs, you need to answer one question: are you a resident or a non resident? So, today we look at the residential status for individuals, only individuals for now, not companies, not HUF, just you as a person. So, guys, first we need to understand why this matters actually, why the residential status matters. So, let's clear up a mix up here. Residential status is not the same as citizenship. Your passport says which country you belong to, your residential status tells the income tax department which of your income they can tax. So, an Indian citizen, who lives in Singapore most of the year might be a non-resident in India, and alternatively, a foreign citizen who spends most of the year in India might be treated as a resident here. Why does it matter? Because it decides how much of your income gets taxed in India. A resident is taxed on income from anywhere in the world, and a non-resident is taxed only on income earned in India. Guys, I repeat, these two are very, very important sentences. A resident is taxed on income from anywhere in the world, right? And a non-resident is taxed only on income earned in India. So that's a huge difference, guys. If you get this wrong, you could pay tax you don't owe, right? Or miss any tax you do owe and get a notice later. So we need to understand four simple rules here. Before the details, we need to keep these 4 points in mind. Number one, your status is checked every year. You are a non-resident Indian forever. This year could be a resident, next year a non-resident. It depends on your days in India in that particular year, right? So we need to understand if you are a non-resident in that particular year, or if you are not a non-resident in that particular year, right? So second important point is that you get only one status per year. I repeat, only one status per year. It covers all your income. You can't be treated as a resident for your salary income and a non-resident for your rental income in the same year, right? The next point is the citizenship and residential status are two different things. This is also very important point. I repeat, citizenship and residential status are two different things. When we talk about the income tax act provisions. And the fourth most important point, and this point kind of surprises people, and that is, you can be a tax resident of more than one country at the same time. So India doesn't care what another country decides. Each country checks its own rules. Now, the two main tests we need to consider here, and this is basically the actual rule, and the section of this is section 6 subsection 2 of the new Income Tax Act 2025. There are two tests here, If you pass either one, you are a resident. If you fail both, you are a non-resident. You don't need to pass both, just one, right? So number one test is you were in India for 182 days or more in a particular year. Very simple, cross 182 days and you are a resident. Test number two, you need both of these together. You were in India for 60 days or more in this year, and you were in India for 365 days or more in total over the last 4 years. So think of test number two, as catching people who don't cross 182 days in any 1 year, but who clearly spends a lot of time in India when you look at the last 5 years together. Right. So one important detail here is when you count days, both your arrival day and your departure day, count as days in India. So if you land on, say, on 1st of the month and leave on 10th of the month, so that's 10 days, not 8 days. A lot of people get this wrong. So if you fail both these tests, you are simply a non-resident. Nothing more to check here. Now an important point here is, there is an exception for people leaving India for a job, and this point is going to be very, very important for those people who left India for a job in any city, in any country abroad, right? Or who is leaving India for a job in any country abroad. Now, what's the exception? If you are an Indian citizen and you leave India during the year to take up a job abroad, in that case, the 60-day part of test 2, which we have discussed above, doesn't apply to you. Same rule if you leave India to join the crew of Indian ship, So for these people, only 182 days test matters. I repeat, so for these people, we have to see only 182 days criteria. No 60 days criteria to be seen, to be checked. No 365 days criteria to be checked. Only 182 days criteria. Now, the next point is the 120-day rule for basically for the visitors, So here is a rule that matters a lot for NRIs who visit India very often, right? So first, a small definition. A person of Indian origin means someone whose parent or grandparent was born in undivided India, that is before partition. If you are an Indian citizen or a person of Indian origin and you are visiting India during the year, the 60 days rule in test number 2 can change, but only if your income crosses a certain limit, right? So here is how. Look at your income earned in India, not counting income from foreign sources. I'm talking about only income earned in India. If that India income is more than 15 lakh rupees in the particular year, the 60 days number becomes 120 days, right? So you need 120 days or more this year and 365 days or more over the last 4 years, right? If that Indian income is 15 lakh or less, this rule doesn't apply to you at all. The 60 days test is simply switched off. If we take a small example, guys, two NRIs both visit India for 100 days a year, both have spent 365 days plus here over the last 4 years. One earns 20 lakh rupees in India and the other person earns 10 lakh rupees. So the first person becomes a resident because of 120-day rule here. The second person stays a non-resident because of them. This test doesn't apply at all. Same travel pattern, different results, and just because of income. Now, let's come to another important concept, and that concept is deemed resident, right? So guys, some wealthy Indian citizens used to plan their travel so carefully that they never became a tax resident of any particular country, not India, not anywhere. This rule stops this practice, right? So you are treated as deemed resident of India if all four of the conditions are true, right? So there are four conditions. If all are true, if all are applicable, you are treated as the deemed resident in India. Number one, you are a Indian citizen. Number two, your income, India income, you know, is more than 15 lakh rupees, 1 5. Number three, you don't pass either of the two basic tests as discussed earlier. And number four, you are not required to pay any tax in any other country based on where you live or are based there. So guys, if all these four conditions are true or are satisfied, India treats you as a resident even if you spend almost no days here. The message is very simple. If you are not paying any tax anywhere, you are an Indian citizen earning well in India, so India will tax you as a resident. All right. Now let's move to the next concept. I would say the next important concept, and that concept is resident basically. So being a resident, so we have seen above, in the above conditions, if you are treated as resident or a non-resident. Now, being a resident is not the final answer. There is one more split. A resident can be ROR and RNOR. Resident, ROR means resident and ordinarily resident. RNOR means resident but not ordinarily resident, right? So this matters a lot. For example, an RNOR pays tax almost like a non-resident on foreign income. Most of it stays out of Indian tax net. An ROR pays tax on India on income from anywhere in the world. I repeat, an ROR means resident and ordinarily resident always pays tax on income from anywhere in the world, right? So to be ROR, you must pass one of the basic tests as we discussed earlier, plus there are two more conditions, and both conditions should be satisfied to make you ROR. Number one, you were a resident under the basic test in at least 2 out of 10 years, right? So I repeat, you were a resident under the basic test in any 2 years out of the last 10 years. And the second condition is that you were in India for 730 days or more over the last 7 years. If you pass both, you are ROR. If you miss even one, you become RNOR. So there is no separate test for RNOR. It's just that, what you get if you are a resident but don't meet both ROR conditions. So this is exactly what happens to many people, guys, who move back to India after years abroad. They cross 182 days easily and becomes resident, but they have not been in India long enough over the last 7 years to hit 730 days. So they become RNOR, which usually works in their favor, since their foreign income stays mostly untaxed for a while. Now there are two special cases, guys, and these special cases are for RNOR only, right? So the law has two more situations where you are automatically treated as RNOR, no matter what the day count says. Case number one, this matches the deemed resident rule we saw earlier, right? If you are an Indian citizen earning more than 15 lakhs in India and not taxed anywhere else, and I repeat, and not taxed in any country, right, and you got deemed as a resident under that rule, you're automatically RNOR, not ROR. right? So in this situation you will be treated as RNOR only. And the case number 2, so this matches the 120 days visitor rule. If you are an Indian citizen or a person of Indian origin visiting India and earning more than 15 lakhs in India, staying for 120 days to 180 days, I mean between 120 and 181 days, and you have been India for 365 days over the last 4 years, you are automatically RNOR. This is true even if you would otherwise qualify as ROR under the normal test. So guys, in both these cases, the law is making sure these people don't fall into the stricter tax category, even if the day count might suggest otherwise. Guys, now here I want to take a small example. Let's put our understanding in the form of one example. Let's say Mr. Arjun is a US citizen, right, with Indian roots. He visits his parents in India every year. So this year he stayed for 130 days. Over the last 4 years, he was in India for 500 days in total. He earns 18 lakhs a year from rented flat in Gurgaon, right? That's his only India income. His US salary does not count here. Let's check his status step by step. Test number 1, 130 days is less than 182 days, fails. Okay, not applicable. Test number 2, normally we would see we would need basically 60 days plus 365 days, but since he is visiting India and has Indian origin, we check the 120 days rule. His India income is 18 lakh rupees, more than 15 lakh rupees, right? So the 60-day number becomes 120 days. He stayed how many days? He stayed 130 days actually in this example. That's more than 120. And his 500 days over the last 4 years is more than 365. So he passes this modified test and he is a resident. Now, as we seen in our conceptual understanding, that once a person becomes a resident, in that case we'll have to see if he is ROR or RNOR. Now check case B. Indian origin visitor, right? Income above 50 lakh rupees, stayed 120 days to 181 days and crossed 365 days over the last 4 years. That's exactly him. So he is automatically RNOR. No matter what his 2 out of 10 years or 730 days count looks like, he is simply RNOR, right? So guys, these were the concepts which are applicable on the residential status of individual, right? So I want to do just a small recap basically, right? So what we have seen: number 1, check the 2 basic tests, 182 days or 60 days plus 365 days. Pass either one, anyone, and you are a resident. Number 2, if you left India for a job, the 60-day rule does not apply here. Only the 182 days test matters, right? Number 3, if you are an Indian citizen or a person of Indian origin visiting India, check your India income against 15 lakh rupees. It changes the 60 days rule to 120 days or removes it completely. Number 4, if you are a wealthy Indian citizen not taxed anywhere else, the deemed resident rule can make you resident even if even with very few days in India. And number 5, once you are a resident, check ROR or RNOR, right? 2 out of 10 years plus 730 days over 7 years. If you pass both, you are ROR. Missed either one or fall under one of the 2 special cases, you are ROR. So guys, that covers the full picture of the residential status for individuals. So guys, here my objective is to cover I mean the concepts, or I would say the important and critical concepts based on the Income Tax Act 2025, and this is the first part of this particular series, guys. So if you like this audio or if you like this video, please subscribe my channel and stay tuned for the next video. Thank you.